Hi, I'm Tim Kelly and welcome to this week's Video Insight. The information technology sector makes up only a small part of the total market capitalisation of the ASX200 Index, currently in the order of 2.6%. In comparison, information technology companies have a much larger representation in the US, currently contributing around 26% of the market capitalisation of the US S&P 500 Index. Despite its relatively small size, the Australian IT sector has been an interesting part of the market recently, as this chart shows. While the ASX200 Index, shown here in orange, has added a bit over 20% over recent years, the information technology sub-index, shown in white, has steamed ahead, particularly in the last 18 months. Some of the individual share price moves in the information technology space have been spectacular, and investors who are holding the right names have enjoyed some outstanding returns. The big question now, of course, is whether those strong returns can continue into the future. Predicting what might happen in the short term is extremely difficult, and we don't pretend to have any great insights into it, but over longer stretches of time, valuation metrics can tell us something about the likely returns. Ultimately, if you pay too much for an asset, it's very hard to get a good investment return. And so when prices are high, it pays to be very conscious of the risks. Unfortunately, valuation for information technology companies is not straightforward. Valuation multiples in particular need to be used with caution, as a strong growth profile can mean that low or negative earnings today could turn into significant profits tomorrow. And it's not unusual to see analysts working their way up the income statement from profit to EBITDA, even to sales, to try to get valuation multiples to make more sense. Another approach is to look at aggregate valuations. While the numbers for an individual company can move around a lot from year to year, the numbers for a diversified basket of companies tend to be more stable. With this in mind, we've had a look at some valuation multiples aggregated across the Australian and US markets and at different levels of the income statement. The results are interesting. This chart compares average valuation multiples across the 73 IT companies in the S&P 500 Index in the US in blue and the 14 IT companies in the ASX200 Index in gold. Interestingly, we see that the Australian IT sector leaves the US sector for dead. Whether we look at forward PE multiples based on broker consensus, or trailing EV to EBITDA multiples, or even EV to sales multiples, the Australian sector is trading well ahead of its US counterpart, which we think is a surprising outcome. It's important to note that included in the Australian index, there are some very good companies that deserve to trade on high multiples, and the Montgomery Fund and the Montgomery Private Fund are invested in some of those names where we can see value. However, over the last 18 months, large parts of the Australian IT sector have come to trade at extraordinary valuation multiples. And when companies like Apple, Facebook and Alphabet are trading on forward PE multiples close to 20 times, we're not sure that 70 times is the right multiple for the entire Australian IT sector. That's all for this week. Thanks for watching, and we'll be back with more next week.